Hello everyone. How are you guys doing? If you guys can hear me, please let me know in the chat. Yeah, 5 minutes late. I'm sorry, actually 7 minutes late, but it is what it is. So I'm gonna start with something very obvious, which is the fact that we don't have any background music like I promised yesterday that we're gonna have. One of you was nice enough to send me a YouTube channel from a YouTube channel with royalty-free music. I didn't find, I don't know how to integrate it in OBS so that I can actually play the music from that YouTube playlist into this live stream. And to be honest with you, I don't think that I want to do that now. But if you guys know any fast ways to do that, yeah, we can try to do that. I can try to do that right now. So yes, hello everyone. We just had CPI news. This over here, it's the CPI candle on the 5 minutes, this one on gold. We can already see that silver broke that to the downside. And not only that it broke that to the downside, we also have a SMT divergence between the two. And considering that that silver already broke the CPI low, which is right here, and right now it's making some sort of a follow-through move. I'm thinking that gold is actually going to do the same thing. We're on the 1 minute here. I'm pretty much positive that this should remain as a, what do you call it? It's a breakaway gap. Breakaway gap. Okay, so I wouldn't really want to see that. Oh, I didn't write it. Yeah, I did. I really wouldn't want to see this gap being filled right here. But what I do not like is the support that it seems that price is finding inside this BC right here. And I cannot help but look at this divergence that's happening right now, where silver went lower, took sell side, and gold seems to be stuck inside this BC. Okay, I would rather want to wait to see what will happen with this BC, and I would be pretty interested in taking a short if price is going to invalidate this BC in here from the CPI news candle. And only if that would happen. That's how I want to play it safe for now. So yeah, that's how I want to play it safe for now, you guys. Because things could still go north right now. Okay? Things could still go north. Now, just so you guys see what buy-side liquidity was swept by silver, because you see these areas that I've marked in here where silver reached some buy-side area. It's pretty old, okay? This one over here. It's February 19th, 20th, something like that. And we'll see. So, guys, if you have questions, you already know you can ask them in the chat. Greetings to the Netherlands. Hello, Honey Badger, you're back. Okay, why don't you use gold euro or gold AUD or gold GPY as SMT as well instead of silver USD? Because think about it like this. There is a cross, right? A cross pair between USD and euro, right? So gold might appreciate in value in its relationship with USD, but it might not necessarily appreciate. And actually, it's illogical that if gold grows in value relative to silver to USD. So, for example, we got gold USD goes bullish. Okay, so the value of gold increases compared to the value of the US dollar, right? But at the same time, it doesn't mean that gold will increase in value compared to euro. Okay, so I cannot really compare these two because it really doesn't make sense. Why? Because, for example, if in its relation with USD, gold grows in value, it means that the dollar in its relation with gold, it's actually depreciating, right? It's going down. And this, if we look at Euro USD, might mean that Euro USD is going up. So in this case, Euro, it's growing in value compared to US dollar, okay? But we don't know whether it's also growing in value compared to gold, okay? As long as there is a cross pair between one pair or between one currency from a pair and the other currency from the other pair, it doesn't really mean that actually more often than not you will not see them being correlated. Okay? Not necessarily. So if I have, where's the text? Here. If I have XAU USD, okay, and then at the other end I have XAU Euro, okay, it doesn't mean that I can make something of these two. It doesn't mean that these two are correlated. Why? Because I don't know how Euro USD is going. Okay? Because I do have a cross between USD and Euro, which is half from each of these two assets. So that's why I don't use those. To my head, it doesn't make sense. Yes, the markets have been very confusing this week. I also agree. Did you always trade gold? And if not, why did you decide to switch, stick with it? No, I didn't always trade gold. Actually, I was trading everything when I started, before I actually got the hang of it. Just like anyone else, I was trading everything under the sun. Then I found, not me, but I was introduced to ICT concepts. And of course, since at the time ICT was trading Euro USD and sometimes he was also trading GBP USD, I actually started trading Euro USD. And then I started trading also GBP USD. And then I was really afraid of gold because it moved, and it still does so much, so crazy. I was really afraid of it. And yeah, at one point you just start to realize that you can be afraid and expect to grow at the same time. So in order for you to grow, you have to outgrow your fear, right? So that's exactly what I did. I tried to outgrow my fear of thinking that I will never be able to trade gold because it's too volatile, because I can't analyze it, because this, because that, right? But then thinking about this, I realized that you will never outgrow your fear if you don't start, okay? If you don't at least have the intention, if you don't at least see yourself capable of at least starting to outgrow your fear. Yeah, so that's why I started transitioning towards gold, because I really felt that it's something that I needed to do. And soon after that, I started finding new ways of analyzing the markets, because no two assets are gonna move the same. Okay, I like what's going on in here. I already took a short. It's I don't know how to show it to you. I really don't know. Let me just put a stop loss, okay? So my stop loss is 29.18, 29.18. Okay, my entry price is 29.15. Short position. Now we've got this. And we'll see if I did well in taking this short or not. And as usual, we're targeting 2R. Okay, trade. I don't know if you guys are going to be able to see this, but it's right here. I don't know. I have point 0.80. So 1/8 of a contract. And my stop loss at this point is, how much is it? It's, so from 29.15 to 29.18, it's 30 pips. So I'm risking about $240, I think, right? Yeah. 8 times 3, 24. So yeah, about $250 if we were to consider the commission and everything else. Needless to say, like, it's pretty obvious the reason why I took the trade. Because we did eventually invalidate the BISI over here from the news. But I also want to pay attention. Maybe price doesn't necessarily want to go down here to the low of the London kill zone. But yeah, we'll see. This over here, as far as I remember, this is a 4-hour BISI on silver over here. And this was another 4-hour BISI. I hope I recall this correctly. Let's just go to the 4-hour and see. Oh no, it wasn't 4 hours. It was 1 hour. Okay, so H1 BISI. So you guys can see the way in which I mark the PD arrays on a chart. So if I have a trade idea, I also want to make sure that I know all the obstacles that could stay in the way of that trade. Okay, so if I'm taking a short on a lower time frame, I'm thinking that sometimes it could be possible that I'm going to have some obstacles in the way of my trade. And those obstacles, obviously, they're going to be like possible obstacles, could be PD arrays from higher time frames. So that's why I mark PD arrays from higher time frames. Not necessarily as targets. Sometimes, yes, they can serve as targets. They can serve as entry areas. Trade is going pretty nice, by the way. Here it is. Also as, so entry points, targets, or even obstacles, okay? Because once price reaches into a higher time frame PD array, I want to make sure that it's just going to want to smash through it, okay? I don't want to see it stumbling inside that PD array, okay? I really don't want to. I really don't want to. Yeah. So if you guys have questions, I'm more than happy to answer your questions. Good afternoon from Romania. Hi, hello. Trump era, make everything uncertainty. Yeah. Would it be too late to look for a 5-minute setup? It wouldn't really be too late, but I would consider looking for of like not a short, okay? Because like if we zoom out, we're seeing that we've already swept some sell side over here, you see? So maybe you might look for, like over here, you see this entire area. Maybe you might want to consider looking for a short on the 5 minutes, but waiting for like a higher pullback. I don't know, something like that. Okay, now you guys can see that as PD arrays from the higher time frames are being reached into, I just want to remove those from my chart. What the heck am I doing? Because I really want to keep my charts clutter free. Okay. Okay. I'm still not out of the trade. Okay. I'm running $300 something in profit right now for my 0.8 contract trade. But I did put stop loss at break even. Okay, so my stop loss is at break even at the current moment. The reason I'm not necessarily closing this trade right now, because it doesn't have too much to travel. Like the road to the take profit is not, like, take profit level is not that far away, right? It's about 15 bips far. But the thing is that what I like about the dynamic of what's going on right now is that even though silver is reaching into a 1 hour PD array, which is the BISI over here, and don't get me wrong, we could see, because right now if gold is going to go and sweep the low of the London kill zone, okay, just sweep it, like really sweep it, silver might be stuck into the 1 hour fair value gap, okay? So I'm thinking right now that there's a very, very big chance that if price ought to continue to go up, it would only do that after it would take out the low of the London kill zone. Why? Because in order for price to go up, okay, perfect. Look at this, guys. Look at this. This is moving really nicely. Really nicely. Okay, so I've taken most of my trade off right now. So the reason why I was saying that I'm not necessarily thinking to close my trade a little earlier, even if it was very close to the take profit, okay, it's because even if price would want to go up, okay, it's still a big chance that it might want to go up after sweeping some sell side liquidity, okay? And where is sell side? Well, it was here at the low of the London kill zone. At the low of the London kill zone. So we got one win for today. It was a good one. Really good. Let's go. I made $511.50 with this. And I have a 0.05 runner. And this is my FundedNext account. Okay? And by the way, guys, if you have not looked into FundedNext yet, you can go ahead and do that, because it's really a good prop firm. You're gonna find in the description of this live stream, you're gonna find a link where you can actually access them. You can test them out. Make sure that you get used, and I really recommend that you guys make sure you get used to their trading conditions before going into purchasing an actual challenge account. And I think that every prop firm that offers you this option, you should take advantage of it, okay? Because think about it like this. If a prop firm is really serious, okay, and if their business model is that of, making money by copying the trades of the funded trader, which that's ideal. In my opinion, it's an ideal business model for prop firms. And if that prop firm has this business model, then they will offer you, because it's in their interest for funded traders. First of all, it's in their interest for their customers to pass challenges. Second, it's in their interest that their funded clients are profitable, continue to be profitable, including after getting funded. Okay, why? Because if that's the business model of the prop firm, they will also make money from the successful trades that funded traders are going to take, right? So if that's their business model, then they will give you all sorts of tools to make sure that they're going to make it easy for you. Easy, or at least, to bring you as much tools as possible in order for you to get used to their trading conditions, in order for you to know before you purchase what it is that you're going to purchase. Okay? So this is a very good way to figure out whether you are looking at a prop firm that is really serious about it. Okay. It was a good trade. Yeah, really nice. So 50 people in the live stream right now and only 20 likes. Why? Can we get more likes, please? More likes. Do I think prop firms will last long? Well, they've been in the industry for quite a while, right? So yeah, I think they're still going to last long. The way in which you can figure out whether something is going to last longer than it is already. It's like a very good indicator of that is to see whether there is some form of improvement, improvements for the clients, right? So, for example, prop firms have been for some time, right? Present. It started with FTMO, Fivers, and the big firms, right? And then after they started to get known, more people considered opening businesses like them. Okay, so then we've seen an explosion of new prop firms, where after this, people started complaining, right? People started complaining, literally. After this explosion of prop firms, where we see that people start complaining, and then these prop firms, they start to disappear. They appear, they disappear, they appear, they disappear, right? At one point, you're going to see that the new prop firms that are going to come into play, they will want to offer trading conditions, and they will want to build their how do you call it? The word. Oh my God. The reputation in the industry. When there is more emerging firms in a domain, okay, that want to obtain this, which is what? They focus on providing good trading conditions for their clients. So they want to keep their clients happy, okay? Because think about it like this. If a prop firm, or if any firm from any domain, if they're not going to come with improved benefits, with more benefits than the ones that are already in play right now, chances are that the industry will contract, and at one point it's going to reach at a level where there's just going to be a few firms. Like, for example, take for instance Coca-Cola and Pepsi. There are no other. Right? Not that I know of. Maybe there have been, throughout the time, other companies that have tried to do the same thing as Coca-Cola and Pepsi. okay? But pretty much all of them failed. Why? Because there's already someone who leads. The highest standard in this beverage industry, whatever you want to call it, has already been set. There's no higher thing that a new firm might achieve. Okay? So, in my opinion, in the prop firm industry, there is still room to bring better trading conditions for the clients. So as long as we see this, then it's only normal that we might see new prop firms emerging. And while not all of them are going to have the same intention to provide value to their clients, and while not all of them are going to have the same business model, the healthy business model where they win from the winning trades of their funded clients and not from selling challenges, okay, then yes, the industry has a lot of chances to, still continue to be here. At the same time, another indicator, in my opinion, of an industry that might actually continue to stick for longer than it has already is when regulations start to hit that industry. Like, for example, let's take crypto, okay? Crypto was a thing, everyone was buying, everyone was selling. Then we've seen so many cryptocurrencies, being launched. Most of them are not in play anymore, or they have been like rug pulls, or okay? And at one point, there comes a time when the regulators, the people or the entities who make sure that they produce laws to protect consumers from a certain domain, they look at that thing and they say, okay, so people seem to not actually give up on this industry. So as long as there is a bucket full of clients willing to put money into this industry, obviously there's also going to be a bucket full of companies willing to provide whatever the bucket full of clients is actually asking for. Okay? So at this point, even though regulations in a certain industry at the beginning might seem bad, it's actually not a bad thing. It's a very good thing. Why? Because it helps to filter out the bad actors from the industry, those companies that are not here necessarily for the long term in terms of their own intentions, right? They just want to take money as fast as possible and not necessarily provide what they should provide, the value, the opportunity for traders to expand, to trade bigger capitals, to make money together, whatever, okay? And these bad actors, the regulations are going to finish them. So it's a good thing. Long-term, regulations are what we want to look for. Any industry that at one point has been regulated, it's better that it happens like that. In my opinion, yes, regulations come with restrictions, both for the companies and both for the clients of those companies. But at the same time, it also comes with protection. And just remember this, in the industry of finances, whenever we're talking about making money, okay, and prop firms are an industry where you actually just come to make money. The firm makes money, but also the client, okay? We're not seeing an industry where the company provides a service or a product that the client doesn't make money with. Like Coca-Cola, for example, okay? Coca-Cola, the company, makes money from selling goods, but you as a client, when you buy the product, and you drink it or whatever you do with it, you don't make money. You consume the damn thing and that's it, okay? So it's not the case in here with prop firms. The reason why clients exist in the prop firm industry is because the clients want to make money. The prop firm wants to make money, the clients want to make money, okay? So as long as there's the client who wants to make money from this, and there are regulations that are going to protect the investor's money. In this case, the investor is the client. Okay? Then I really think that it's a good thing. So yeah, I don't think so. TJ is asking, do you think regulations will come as there is less liquidity in markets from retail traders now? No, I don't think regulations will come because there's less liquidity from retail traders right now. No, I think that if regulations will come, they're going to come because the regulators, the entities that make laws, they will see that this industry has a lot of potential to continue existing in the future as well, long term. So they just want to make sure that everyone's money is protected. Why? Because if you protect everyone's money, they keep making money. So you as a government will also keep making money. Okay, from the taxes that the traders are going to pay to you, from their payouts, also from the taxes that the serious prop firms are going to pay to you, and so on and so forth. And like I said, a healthy business model for a prop firm, in my opinion, is that which encourages traders to become funded. They facilitate they facilitate, they give you tools to help you in becoming funded. They give you education. They give you journaling tools. They give you all sorts of things, seminars. Okay? They incentivize you to buy, but at the same time, they are interested in teaching you tips and tricks on how you can make the most of the thing that you're buying from them, which in this case is you're buying money to make more money. Okay, you're paying $300 to get $50,000, and then if you pass the challenges, you get funded, and then you can make a lot of money with that $50,000, even though it's fake. Okay, even though it's fake. But a healthy business model which focuses on making money, prop firm making money from the winning trades of the funded traders, that's a good thing. And I think regulations will filter out the prop firms that they can't really do well long term, okay, because they don't have this type of business model. And I think that, yeah, I really think that prop firms are here to stay, especially when we're going to see regulations in the industry. Yeah, especially then. I think that's really something that we should see. I really think. Okay, this is something which I wouldn't know how to trade right now because I don't necessarily have rules for this. How to trade it with my 5-minute method, okay? But what I would do at this point is I would definitely engage my RBV trading method on the 1 minute, okay? So to me at this point, and people who are here, like RBV students, they know what I'm talking about and why such a setup that I'm going to mark right now would be a setup that you might actually consider taking. So this to me at this point is a bullish order block. We're going to see whether price will react from that. Okay, this bearish candle over here, to me that's the bullish order block. We swept sell-side liquidity under the low of the London Hill Zone, and we went even lower than the low that initially went under the low of the Asia session. So London swept Asia low, New York swept London low, and if we're going to see a confirmation for an RBV bullish setup, this would be it. So there's still just a few more seconds until the current 1 minute candle closes, and by looking at the way it's closing, I don't think that we're going to see an entry trigger. Yeah, no entry trigger for now. And by the way, guys, if you are thinking, okay, what is she talking about? What RBV setup? What's that? That's the 1 minute model that I'm teaching to my private students. And if you guys are interested to learn that trading system, I do have a mentorship. It's a one-on-one mentorship. And you can see details about that in my Telegram channel. And I actually think that my Telegram channel is linked somewhere somewhere in the description of this live stream. Anyway, we're going to see if we're going to have an entry confirmation right now, and that's going to be for a long position. So 6 more seconds or so until the current candle closes, and no entry for a long, no entry, okay? No entry for a long. The thing that I love about the RBV 1 minute strategy is the fact that, think about it like this, on the 1 minute, a lot of things can happen, okay? A lot of things can happen. And with things happening so fast on the 1 minute chart, you might be tempted to actually enter a trade when you might not actually get a confirmation because you're thinking, well, I think it's reacting from here. It might react, okay, but more often than not, it's going to confirm to you that you do get an entry setup or an entry confirmation through printing those entry candles that I actually teach in my private mentorship for the RBV 1 minute setup. In this case, if we look at the 1 hour chart and we see that the overall higher time frame bias right now for gold, actually I can't see that in here. I'll have to switch to the 5 minute and just really zoom out. Oh, something's happening here. Okay, there you go. Okay, so the higher time frame bias right now is weekly bearish, daily bullish, okay? So we would be taking a bullish setup based on a daily bias, which is bullish, okay? And this setup would be called, in our community, it would be called a simplified bullish setup, okay? But we're not getting an entry confirmation for that. We're not, because after, yeah, no, we're not. 10 more seconds until the current 1 minute candle closes, and only if it closes in a certain way, we're going to get the entry confirmation. Okay, boom, we've got the entry confirmation. No, it's not a short, it's a long. Sorry, you guys. Okay, with the RBV model, I would usually target 1R, okay? The natural thing for me to do at this point would be to put stop loss right under that low. But I feel like I'm stretching that too much, 1245.07. So it's 50 pips. It's already too much. Already too much. 50 pips of stop loss. And this would, at this point, this would be just a just for fun trade for me. Okay, I made money on the short a little earlier. Ma'am, why don't you trade indices? Because I just don't trade indices. Why don't you eat apples? I don't know, you don't like apples. Yeah, it's just that simple. Great explanation. Never realized the props copied profitable traders, though only made money from losers' fees. Thought only made money from losers' fees. No. Prop firms actually the best business model for prop firms. It's actually that one where they make money from the profitable trades of funded traders. Yeah, that's what's going on. Okay, what's this? 2908. Yay, it's going good. 2908. 2908. Well, let's see. Maybe I just got ahead of myself. And I shouldn't have. Right? We'll see. Okay, at this point, what I don't really like for a buy, for my buy, is the fact that we're seeing this on the 1 minute. You see? What it's good about it, like what would be a little concerning about this bullish trade to me at this point would be the fact that, like, how would I consider just taking some of my risk off? And by the way, I did take the trade. I don't know if you guys can see it here. I don't think you can see it. It's just a 0.20, okay? Just 20th, like 0.20 of a contract. Because like I said, I'm just taking it like just for fun trade. I would consider an obstacle in price going higher, not something from the left side of the chart, not a PD array from the left side of the chart, but I would consider an obstacle whatever would occur here. And the reason for this is the following. Price broke a session low, okay? London low. At this present moment, I don't know if that was a liquidity sweep, and right now this bullish setup is actually just showing the real intention of smart money, which is to take price higher, okay? And higher would be where? Where do we have the next buy side liquidity? Well, in my opinion, one of it is here, okay? And the reason for that is because we got this SMT divergence. So one buy side liquidity area would be this, okay? And then obviously the next one would be here at the high of the New York kill zone, New York session, whatever. And then it might actually continue to go higher. We don't know that, okay? But what I'm seeing, so I don't know whether price going under the low of the London session was a liquidity sweep, and right now we see the actual intention of smart money, which is to go long, okay? Which would be beneficial for our trade, because that's why we took it, okay? Or I don't know whether price breaking the low of the London session would be a break of structure. Because if that is a break of structure, it means this push to the upside is just a pullback. And if this is just a pullback at one point, that pullback might actually end, and that would mean that price would go against my trade. Make sense? I hope it does make sense. Okay, so I want to see what price is going to do when it touches this thingy in here. Okay, it touched it. Is it doing anything with it? Because to me, on a 5-minute, I would consider that like a, yeah, let's say some sort of a bearish order block, even though I wouldn't know exactly how to categorize it. But let's say it's a bearish order block. So I would definitely want to see how price, or if price will react from there. Okay. I'm 25 pips in profit on this trade. Not too much. On 0.20, I have about $50 in profit right now. It's not a big deal, okay? But like I said, I just took this trade just for fun, right? Just for fun. And let's see what price does when it reaches here. So price might actually just turn against me right now, okay? That's why I took the trade just for fun. Just for fun, why? What does it mean just for fun? It means that I'm opening a smaller lot than normal first. Why? First, because my stop loss is pretty big, okay? I have a 50 pip stop loss. So I could minimize or decrease my lot size, okay? What we discussed yesterday, I could definitely do that. But at the same time, there is a big chance that if you see price just going crazy in your favor, you might think, oh my God, I entered with such a small lot size, this thing is going to continue to go up. And then you might just do the stupid thing to enter on an impulse and add more on top of your position at a very bad price, because you're buying high, okay, when price is expensive. There's that chance, okay? I don't know, whatever things might go through my psychology at any given point, okay? So it's best to just do things in a way in which, even if at one point you lose it, you lose control, okay? Then you're not going to suffer that much, right? So one thing for me to do this is to take a trade, which I consider it to be just for fun. And for me, that means, especially if I made profit for the day, which I did, it means just take the trade only to see if it would have worked in your favor. Okay, if it would have worked in your favor. Because you also have the chance to just put like a paper trade. But if you do that again, and if you're going to see that, oh my God, just look at price going up, and I just didn't take this, I only took it as a paper trade, then there's a high probability that if you see it just bursting up, but you didn't take anything, you're again going to buy at a very high price. I don't want that. Okay, I definitely don't want that. Okay. Now, someone was asking me a little earlier if it's too late right now to look for a 5-minute setup. And remember what I told you? I told you you might do that, but after a pullback, okay, or wait for price to reach into a sell side area and then look for the opposite side of the market, of the setup to develop, which is a bullish setup. Okay, now, someone wrote to me right now and told me, yes, we have swept London low, and there is a SMT for a buy, where gold did go under the low of the London kill zone and silver did not. And it's exactly what I told you that it might happen at the beginning of our stream, which is what? We might see gold going under the low of the London kill zone, sweep it, which is exactly what happened. And while gold is sweeping the low of the London session, we're going to see silver staying inside this 1 hour fair value gap, the blue one in here that you see marked, which is exactly what happened, okay? But if you can take a 5-minute setup versus a 1-minute setup, okay? I was able to take a 1-minute setup with the 1-minute RBV strategy that I usually use. So instead of waiting for a 5-minute entry confirmation, I could actually engage the 1 minute and just do it just for fun. Just do it just for fun. My actual entry was 2912.84. Let's just make this reflect in here. 2912.84. Because I actually got something like that, okay? And 1R, sorry, would be kind of like here. I'm thinking that there's pretty much no reason why price would just stop here at 29.18, right? At least not from a 1 minute, at least not from a liquidity perspective, right? I don't see any reason at this point why price would not go to 29.19 and maybe just even higher. The thing is that I really want to see what happens here. Now, for price to go and take out sell side under the low of the London session, it was really important that this gap here, this fair value gap, the yellow one, remained unfilled as a breakaway gap. Okay? Right now, I'm not necessarily thinking the price is just making a pullback and that it will want to go down. Okay? It might do that, but at the same time, it might not necessarily want that, okay? Just want you to be aware of that. So both things could happen at this point, okay? The thing is that if I'm thinking that this market is right now intending to go higher, okay, I should see price go up to this fair value gap, which was previously a breakaway gap. So if you're thinking that price is going to go down, you want to see a bearish fair value gap that remains unfilled, and that's going to be your breakaway gap, okay? But if price went down, so it left that as a breakaway gap, and then it goes down, sweeps sell side, and then it creates like some sort of bullishness, some sort of signs that it wants to go higher, which it did in our case. And then price, you're thinking, okay, so right now there are a lot of signs that tell me that price might actually want to go higher, okay? Now you're expecting for this former breakaway gap to be smashed. Okay? Expecting price to run through it. I'm not necessarily thinking that, well, price goes up because it's going to reach here and then it's actually just going to reject from there. Of course it might actually. It might do that as well. But we're going to know only after we see it happening. Okay? That's when we're going to know. Okay. I didn't check to see if you guys have any questions. Oh, you guys wrote a lot of stuff in here. Super clean. Do you trade 1 minute setup nowadays only or what? I'm confused. So I still trade the 1 minute RBV setup. Okay. But every day I mainly look for the 5 minute SMT setup. Okay. But it doesn't mean that if I will see that there is a higher chance of right now a 1 minute RBV setup being created rather than waiting for a 5 minute setup, SMT setup, it doesn't mean that I'm not going to take the option which might be forming faster than the 5 minute setup. Okay. Someone said in the chat, long is fine. I aim for 29.25. Yeah, the high of London. Of course, price might go there. Okay, one thing that I love about whatever it is that's going on right now is that, but we're going to have to see if price will reject from here, okay? Because everything has to, has to be confirmed. We're going to drop down to the 1 minute. Okay, so what I'm seeing right now is that silver went here under that minor area over here, you see? Whereas gold did not. So I would consider all this area like that, okay? Which on gold starts around here. So we could say that silver is sweeping this area for now, but we don't know if it's a sweep yet, okay? We don't know. It could be a break, not a sweep, which means that it could do this. If it's a break, it could do this. If it's a sweep, it could do this. Okay? We don't know yet. Whereas gold, with this push to the downside, which started on silver here at the same time, this is not being swept. Okay? In my opinion, this is the way time and price theory applies in the market. Price is doing something different than what it should do if you look at two correlated pairs, and it's doing it at the same time. So from a price perspective, two pairs that are correlated and should normally walk together hand in hand in the same direction, from a price perspective, they're not doing that anymore. They're not walking in the same direction hand in hand, and they've split at the same time. So there's a difference in price, which happens at the same time on two assets that should otherwise be correlated. Okay? In my understanding, and it doesn't have to be the best understanding, in my understanding, this is how you'd be looking at what does time and price mean. To me, this is what it means. Yep. Daily open is usually a big obstacle too. Definitely. 12 midnight. I used to mark 12 midnight openings. I don't know why. I stopped doing that. But let's just do it right now. So 12 midnight opening. My sessions are a bit off. Probably you've already noticed that. It's because of the time zone difference. So this is 12 minute open right here. And I usually make this like a purple line. This is 12 a.m. And for silver, 12 a.m. open is here. 12 a.m. Okay. Yes, that's true. 12 a.m. openings are also a big obstacle or a area of propulsion if you want. Okay, I'm going to remove some of the drawings that I have here, or at least just drag them a little more like that. So that everything becomes a little clearer here on our chart. This thing was so close to reaching at least 1 hour. Because like I said, with the RBV strategy, I usually go for 1 hour. But we'll see. Okay, there was a support level at 2908.31. News wasn't able to push through, so we're going up. Yeah, that might happen. What's your win rate this year? I haven't looked into it. Hi Alex, why not TP at 20 pips? That's normal TP. Absolutely, it is. But with a just for fun trade, I would leave it for a 1 hour. If we were to consider that 20 pips is the norm for the RBV 1 minute setup, then yes, we've already reached 2 times TP, right? But after the first TP, which is at 20 pips, the next TP is 1 hour, right? And then we can actually leave it 2 hour, whatever. Also, one good indication to see whether it's worth leaving your 1 minute setup go for more, it's to see whether as new candles print, as more minutes pass, to increase your time frame and see whether a higher time frame will also start to support price action that forms in order to confirm the continuation of, price going bullish on the next time frame, which at this point, the next one after the 1 minute would be the 5 minutes. So judging by the fact that we have this SMT where gold swept the low of the London session and silver did not, it stayed stuck into this 1 hour fair value gap, okay? And then after that, gold made this bullish fair value gap. That's a good indication to actually continue to keep your 1 minute trade open a little longer after you reach 20 pips or whatever. Okay, so we got 1 hour right now with the other trade. It's right here. I really don't know if you guys can see it. I'm gonna consider putting my account here, logging my MetaTrader on the laptop so that I can also show you the trades that I'm taking. For now, we reached TP1, 50 pips, which is 1 hour, okay? I'm definitely considering moving stop loss at break even. And I would love to see that price will just continue to respect the bullish order flow. Meaning what? Creating 1 minute fair value gap, bullish fair value gap. 1 minute, 5 minute doesn't really matter, but right now we're looking at the 1 minute. So creating bullish fair value gaps, at the same time creating higher highs, making pullbacks to rebalance the bullish fair value gap that it just created, and then rejecting and going higher. So that's what, in my understanding, that's what bullish order flow means. So I would love to see price doing this, just that. Also a very minor SMT that we got here. Minor, but logic, because it makes sense from a logical perspective, which is what? Gold creates lower low. This is a consolidation. We could consider that this is the accumulation, fake break, and then break of structure to the upside. Okay, right now, this is the way in which I'm interpreting all of this, right? Now, if price were to break under this low over here, that would be a problem, okay? I mean, not a problem per se, but it would actually mean that it doesn't necessarily want to respect the 1 minute bullish order flow. Why? Because think about it like this. This low over here went down under this small consolidation, took sell side. At the same time, silver, at the same hour, it stayed stuck into a bullish fair value gap, which is here. So we have gold creating a lower low, rejecting. So if it created the lower low, but then it rejected and created a bullish fair value gap, it means that at this point, going down here, creating the lower low, was a liquidity sweep, okay? Because silver did not do the same thing. At the same time, if gold will break under this low in here, I would consider that's when I consider it a market structure shift, which is what? Breaking a low that took sell side, also created an SMT, then created a bullish fair value gap, created a higher high, okay? Here it is, high, higher high, okay? And then that low, which previously took sell side, and it took enough sell side to create a higher high plus a BISI, right now it's being broken to the downside. So think about it like this. If this low over here took enough sell side under that minor area to be able to push higher, create a higher high, and create this bullish imbalance, why would price want to go even lower? Well, it means that this low did not actually take enough sell side liquidity, and right now price might actually be interested to going lower for more sell side. Where is the next level of sell side? Well, I don't know. Let's just zoom out and see. Where do we have a lower SMT? Well, this low, okay, 29.06. There's also this one, 29.10. So there's levels that the market creates. Okay, I really hope these explanations really do make sense, because I'm trying to explain to you guys the logic that I apply when I'm analyzing price action. Okay, only if something happens, the chances of price going this way or that way increase or decrease, right? And you have to apply the same logic over and over again, because otherwise you will not know if this strategy works. Like, what is a strategy? It's a set of rules that you use no matter what. But if you use different rules with every setup, you will not know what strategy will apply for this winning trade and what strategy will apply for this losing trade. So if you don't know what strategy will apply when you take a win, you will not know what things to keep repeating because it seems to have good results. And if you don't know what strategy will apply when you lose a trade, then you will not know what to improve. You will not know what to avoid. Make sense? So that's why it's very important to use the same set of rules, to have the same logic for using different PD arrays, different concepts, whatever. Okay, I know order blocks can be identified in so many ways. I usually identify order blocks only in one way. I know liquidity by some people is identified in so many ways on different time frames, whatever. I happen to identify liquidity areas only in one single way. That's just what works for me. This is what consistency means for me. And like I said many times, it doesn't have to be the same thing for you. But just make sure that whatever you do, you're going to follow the same thing with every setup, with every trade that you take, because otherwise you will not know how to evaluate your entire performance. What was your entry confirmation on the 1 minute? My entry confirmation were these two bullish candles here. We're talking about 942 and 943 M1 candles, New York time zone. Don't you think you should add ICT concepts to your live title, as I feel like it would bring more viewers and better questions that will help the intended audience? Yeah. Okay, I will. And what should I? Yeah. I don't know. I could do that. And what? RBV, like Alex Lara trading ICT concepts. Yeah, I can do that. You know, clickbait, right? I think it's called. Is a 5-minute setup forming for SMT, just waiting for a support bullish candle to form on the current M5 FEG? Yes, Ryan. Yes, indeed. The problem with that is that the entry confirmation for a 5-minute, not necessarily a problem, but more like a thing to pay attention to. It's that candle. Okay, so once that candle closed, let me just remove the drawing. So once the 10 a.m. candle closed on the 5 minutes, that's where your entry confirmation for a long 5-minute trade would have occurred. So your entry would have been like this. The problem with this, as I see it, is the fact that price might actually reach a little lower. Okay, at this point, the untapped bullish order block that I see, I'm gonna say it's this one, even though I'm just gonna say it's this one, the 935 candle, just because 920 was already retested, right? So 935 M5 candle, New York time. Right now, that's your order block. And you can see that the entry candle or any price action prior to that did not touch that candle. So because of this, I'm thinking more that your stop loss would rather be big, because normally you want to put stop loss at the midpoint of the mean threshold of the order block or under the order block. So at this point, the trade for a 5-minute would look like this, and you would have to target 2R. So this would be a trade that would have to go, okay, I would target that area, like 29.30. Even if it's not really 2R, but it's close. At this point, price would have to travel 29.17 to 29.30, so that's 130 pips. It's not a big effort for gold, but you have to understand that it's not going to happen just like that in a jiffy. Okay, so you have to be aware with the fact that your stop loss, which is 29.17 to 20, so your stop loss at this point is 70 pips, $7. Okay, if you open one contract, $700. Your stop loss, which is the stress that sits behind, in the back of your head whenever you have a trade open. The stop loss is the stress factor that sits in the background of your mind whenever or as long as a trade is open. Okay, so you have to be prepared to live with that stress factor for a little longer than you would, just because price has to travel like, a bigger distance to reach your potential target. Okay, but yes, we did have an entry confirmation for a 5-minute long based on the 5-minute SMT model. And yes, just like I said, even if the stop loss is too wide, you can always take the trade just for fun, guys. Okay, just take it for fun. Take a mini lot. Okay, just take a mini lot. Alex, don't you think that Mondays and sometimes Tuesdays price doesn't behave logically? Yeah, I actually do. Mondays usually. Tuesdays not really, but Mondays, yeah. Today's Wednesday, I think, though, right? Or yeah, it's Wednesday. Indicator trade XO level is nice to see them on TradingView. Indicator. Hi Alex, I have a question about the consolidation that is going on in March. Do you keep something in mind now when taking SMT setups? I keep in mind the fact that the consolidation in March, I would have loved to not see a consolidation in March. I really would have loved to not see a consolidation in March. I would have loved, like, if March ought to create the high of the year, or at least the beginning of a deeper pullback, if we look at price from a higher time frame perspective, which is the daily, I would not want to see March consolidating. I would want to see March going at a old buy-side liquidity level and then just making a sharp move to the downside, and that would let me know, okay, March is ready to send price lower, whether it's going to be like a deeper pullback considering the range that price traveled from the beginning of the year till right now, or whether it's just going to be a top of the yearly open. Okay, I would love to see March go up, take buy side, and then boof. Okay, I don't like to see when March is consolidating, because just as much as it could be breaking that consolidation to the downside, it might also then break it to the upside. So a consolidation, okay, you have to think that everything in price action starts like the beginning of a new micro, the reset, I would say. A price action reset would usually start with a consolidation. Okay, in my mind, everything starts with a consolidation, right? So I see a consolidation, and then we've learned from ICT that when the move that breaks out of the consolidation, doesn't matter what direction, that's an expansion. Okay? After the expansion, you can get a pullback or you can get a reversal. Okay? So just imagine the following scenario. You have price consolidating, okay? And then price breaks to the downside. So this was the consolidation, and then push to the downside, the break to the downside. That's your expansion, okay? After an expansion, price can move in the following two profiles. It could pull back, okay? And then continue, right? Or it could reverse. And usually reversals, we know that reversals happen when price reaches a old low, sell side area. And basically that's the definition of a reversal. It's when price starts to move the opposite direction to where it was going previously. And usually that happens, like price action things to be aware of is price goes down, sweeps sell side, old, right? Whatever that means. And then it moves the opposite direction, okay? And eventually breaks the ignition point of the initial expansion, right? The thing with March is that March should set the tone for what's about to happen for the next at least 3 months, which is when? Till the middle of the year, which is June, okay? And usually if you're going to go back every year on a daily chart, mark the first trading day of January, mark the last trading day of December, and then mark the entire price action from the daily chart, okay, that took place in June. So all those 20, 21, 22 daily candles that were printed in the month of June, put that into a rectangle. And you're going to see more often than not that at the middle of the year, time-wise, which is June, price usually creates some form of equilibrium, which is what? From January to June, price goes up, June consolidates, and then price continues to go up pretty much the same number of pips as it went from January to June. You're going to find years, like consecutive years, when that happened, okay? Sometimes March is going to set the tone for a pullback. So if imagine, for example, if this is January goes up, and then March comes, okay? March, let's say it reaches the high of the previous year, okay? And then it's just going to use that buy side, it's very smart money shorts, to start a pullback, okay? And then April, May, we're going to see price consolidating, slightly going to the upside. And then June, usually it's going to start another consolidation. And then price is going to continue to go in the same direction, right? But sometimes March doesn't set the tone for what's about to happen for the next 3 months, okay, till June, when we are usually expected to see the whole month of June, or at least half of it, being a consolidation. Sometimes March is just going to consolidate. And I hate it when that happens. I really hate it. I don't like it, okay? I really don't. Yeah, so for example, if you guys look in here, it's 2024, okay? And you can see this whole price action being the month of June. Right there, okay? June. And if we zoom in, just look at the consolidation over there, okay? And if we look here to the left side, okay? The beginning of the year was vertical line here. So the beginning of the year, 2024, okay, was around here. There. Okay, somewhere around here, right? The blue vertical line, right? The end of the year, which is the last trading day in December, happened, or was, around here, 31st of December, okay? So this entire price action that I caught inside or in between these two blue vertical lines, that's the whole yearly range of 2024. And I want you to take a look at the price action that happened in June. And right now, I can see expansion, equilibrium, and then another expansion to create the high of the year, which is pretty much the same in size as the expansion that took place prior to June. Okay, so the best way to measure this is to take a fib, put it from the low of the year all the way to the high of the year, and you're going to see 50% is here. Okay, and look at so close that month of June being situated. Look at how close to the 50% level is sitting. Okay, and you can use this to identify long-term targets or long-term price behavior. Okay, like if I'm in June and I see price consolidating, then I'm going to look at the whole price action that occurred from January till June. And if that was an expansion to the upside, right, and then June consolidates, then I'll wait for a clear break to the upside of that June consolidation on the daily chart. So I want to see consecutive bullish candles on a daily chart printing, okay? And then I'm going to consider, okay, then I'm considering that the high of the year is going to form 2,000 pips higher than this June consolidation. Why? Because from the beginning of the year till this June consolidation, price traveled 2,000 pips. So I'm thinking that there's going to be another expansion leg to the upside that's going to be equal to the one that just happened in the first half of the year. I'm feeling these, I have a sense that I'm feeling these live streams with a lot of nuggets. You guys are learning a lot, and I don't see you appreciating this enough. Just hit the like button, guys. Whether it's right now or at the end of the stream, I don't care, but just do it. I'm looking for new questions. So I've answered the March thingy, okay? Hello, Alex. Your videos on Insta and YouTube were really helpful. Waiting for your Insta videos again. Okay, yeah. Definitely. I'm gonna start posting on Instagram again, guys. Really soon, don't worry. It's good to know that you are finding whatever it is that I post to be helpful. I'm glad. Okay, questions. Do you guys have any more questions? Because if you don't have any more questions, we've already been in this live stream for what, an hour and 20 minutes, I think. So if you guys don't have any more questions, I've already taken one trade, one full risk trade, and one fun trade just for fun, the bullish one. And right now I didn't engage into this 5 minute long, okay, this one in here. But yeah, that's where the entry would have been. But I'm fine with the profit that I made for now, so I'm just going to stick to that. Someone asking, do you still watch ICT content or have stopped because you use your own model? I haven't watched ICT or anything from ICT for about, I think, 2 years, 3 years. When did he start that YouTube mentorship? I think it was his 2022 mentorship, right? I didn't watch any of that. I actually think I watched 2 episodes. I think they were episodes 16, 17, something like that. I don't remember exactly. He was talking about short-term high, short-term low, intermediate-term high, intermediate-term low, and then long-term high, long-term low. So I watched that video and the next one after that because they were related. Other than that, I haven't watched anything from him. I tried a few times to watch some of his live streams, but to be honest with you, I noticed that every time he said something new, and he always says something new, okay? He always gives like a new concept. Oh, this is the unicorn. This is the six sisters. This is this. This is that. This is whatever. I tend to want to understand it, and I tend to want to apply it. Wanting to understand something is not a bad thing. Wanting to include something new in your analysis is not necessarily a bad thing if you feel like your strategy is missing something, but you don't know exactly what. So you're looking for things to tweak it here and there, and maybe this new concept might help, right? But in my case, at this point, I don't really feel that there is such a big need to change or to make drastic changes to the models that I use right now. But I did notice in me this urge to understand new concepts that ICT was talking about, and then to want to apply them and just ditch my strategy altogether. And that's not good. So, because I just can't stop wanting to apply new stuff from ICT, I just stopped watching ICT content because he always gives something new. And it means that I will always just ping pong in between strategies. And I just don't want to do that anymore. So yeah, I don't watch ICT content anymore. I stopped because I have my own model. 1 minute time frame printed a bullish reversal SMT after London kill zone low was taken. Yes, it did. Is that a 4-hour SMT? Please confirm. Well, it can also be a 4-hour SMT. I don't know, but let's go and see. 4-hour chart. No, it's not. It's not. But I don't know if you guys noticed here, but I had that a blue line over here. Here it is. Here it is. Where I marked a 4-hour BISI. So we have multiple PD arrays that overlapped here. So I had the low of the London session, sell side liquidity, okay? Not just sell side liquidity, but SMT sell side liquidity because it was this one, okay? That SMT, so sell side was taken. We also have a new SMT being created where gold did go under the low of the London kill zone while silver did not. Silver found support into a 1-hour fair value gap. And then after gold swept the sell side under the low of the London kill zone, it also created this bullish fair value gap, right? Now, in going under the low of the London kill zone, Also, it hit the 4-hour BISI that we have there, but it didn't necessarily create a 4-hour SMT. But you don't need a 4-hour SMT, okay? You just need a 5-minute SMT and a 5-minute BISI, of course. I would have loved to see price just starting to move already, you know, because it's already like it's what? It's 10:30 already. Yeah. So yeah, I would have loved to see it go up already. Just okay, you consolidated enough after you've rebalanced this BC, consolidated, and now it's time to go up. I'd love to see it do that, but we'll see, because maybe it can't go any further up than this. That's why I always say, to decide whether you have a setup or not, look at what price is doing right now. Don't look at where it reached to the left side of the chart. You can do that. Like, for example, okay, it reached a 4-hour fair value gap, or it reached like an old low from the left side. It's 2 weeks old, 3 weeks old, 4 weeks, 4 months, whatever. It doesn't matter. It's still liquidity. But the question is, will the smaller time frames react the way they should to those higher time frame PDRAs? And that's when you need to switch to lower time frames and see whether you get the reaction that you think you should get should price reject from that higher time frame PDRA. So that's why in looking for a setup, you have to wait for a reaction that happens with the current price action. So just focus on what's happening right now. Okay? Someone said episode 12 was that one from ICT. It might be 12, 17. I don't know. I'm good with numbers, but sometimes I just get them confused. Whatever. Can you explain your 1-minute confirmation for entry when tapping into your 5 or 15-minute PD arrays, as might use for my strategy too? I don't have 5 minutes or 15-minute PD arrays. The PD array can also be taken on the 1 minute, which is kill zone highs and lows. So the high and the low of the, in this case the low of the London kill zone, it's the same price level. It doesn't matter if you're looking at it on the 5 minute or on the 15 minute or in the 1 minute or in the 1 hour. Okay. The entry confirmation is just 2 rejection candles from a fair value gap. The candle closure one. ICT makes me fall asleep. He drags on and on and on. Maybe he is. Maybe I'm also dragging. It really depends. Why do you go to someone's live stream? To get, I don't know. Yeah, just think about this. Why do you go to someone's live stream? You could go there because you're thinking that you want to copy their trades. Bad thing. You could go there because you're thinking that you like their vibe, their energy, they make good jokes, whatever. That's a good thing. You go there for entertainment, right? But then you wouldn't have to go to a Forex trader, YouTuber, live streamer if you want to get entertained, right? You could just open Netflix and just start a comedy or whatever. You could go to someone's live stream because you want to learn. And that's a good thing, I believe. And now the question is, what do you want to learn? Do you want to learn a new trading strategy? Because if that's the case, trading strategies are really usually explained really fast. Like there's not, like if there is a trading strategy which is really on point, a trader has, I don't know, 7 rules. It's not going to take that long for them to explain to you those 7 rules, and then he's done. Okay? So now the question is, during that time of being in a live stream for 1 hour, 2 hours, 3 hours, until you will actually get a setup, what are you going to talk about? Because you can't just talk about every candle that prints and, you know, to explain, okay, so this candle is telling me this candle is telling me that. Because like what, like for example, for instance, what might I been able to say about this candle, this, because it's just like it's 30 plus minutes in here. right? That I just wouldn't know what to say because there's just nothing going on. So then you start talking about mindset. You start talking about psychology. You start talking about different things, that are still extremely helpful in a trader's journey. And if you went to that streamer's live stream to learn, but you only want to learn strategy-wise, but you want to ditch the psychology learning-wise, it's not good in my opinion, because you can't have one without the other. You can't have success by only using one. I don't know what he drags on and on and on. What he drags on and on about. But what I can say is that when I used to watch his videos, I enjoyed his rants. I enjoyed his rants because usually the biggest psychology nuggets that I was able to take from ICT were usually inside rants. And those are usually things that he talks about on and on and on and on. He drags things on and on and on. And it was, at that point, to me, it was a good exercise to practice patience. So yeah. Okay, here's what's going on right now. So I'm paying attention to everything that might happen, okay? I see gold, silver not being able, for now, not being able to go higher here, okay? Whereas gold did go higher. You see, it went above this consolidation. Okay, so remember what I said, everything starts with the consolidation. Think about, what if this is accumulation, manipulation, reversal, pullback, distribution? It could happen. You have to look at price action as a multitude of possibilities, because this is what it is. It's just like life, guys. You can take good lessons, or you can, complain about different situations, different experiences that you're going through. But ultimately, everything everything is just a multitude of possibilities. Like, just imagine you're going through a bad period in your life. There's a possibility that you're gonna react in a bad way to that and just become a hater and just, start being snappy with everyone just because you're having a bad time. There's also the possibility in which you're thinking, okay, what is this experience which I don't prefer to live? What is this experience trying to teach me? Or you might ask yourself, what beliefs do I have that might have made me attract this type of experience in my life, which it's not the type of experience that I prefer to live. And then if you open yourself up to receiving a lesson from the things that it is you're experiencing right now, which you're not really loving the situation you're in right now, but if you open yourself up to asking, okay, what am I supposed to learn from here? How did I attract this? How am I being responsible for this? What can I do to avoid this in the future? Then obviously you're going to learn something about that. So we have the same situation, which can be seen both from the possibility of, ending your life, or from the possibility of learning something and making something good out of it. Yeah, I don't think this is going to go any further up. I don't know. We'll see. We'll see how silver reacts after it takes out this low, the 920 low, if it takes out that low. And we'll see if gold will continue to respect this BISI over here. We'll see. So you see, I'm not saying, oh, gold will go up, oh, gold will go down. I'm just remaining open to both possibilities. And I'm just trying to read in between the lines. What are the lines? The candles. You try to read in between the lines. Okay, so if price ought to continue to go higher, what should happen based on my set of rules? Well, I should see silver creating a lower low, so the indicator is oversold, and then I should see gold finding support into a bullish fair value gap. If that happens, boom. Okay? You gravitate more towards the idea of price continuing to go higher. And if the opposite happens, then you just consider the possibility of price going down. But you just have to wait for some sort of confirmation that price will form right now as we speak. And you have to wait for that. It's very important. Persistence pays. Someone said, someone says, you're a good teacher, and to the point, he just waffles for an hour to tell you something that could have taken 2 minutes. Okay, thank you. I'm a teacher to the point. He's also a good teacher. I don't know. It really depends for what you're looking for. Maybe the things that I've started talking about, because I've only started talking about the way that I view the market's price action just recently, right? So it's something new to you guys. Maybe you did hear someone else presenting these concepts in a similar way, but not really the same way. So it's curiosity right now that's making you say that whatever it is that I'm saying is interesting. I'm not saying that what I'm actually saying is not interesting, because it is, trust me. It's very interesting. But there's going to be a time, most likely, when I will not know exactly what to talk about during the live streams from a technical analysis perspective, and that's fine. I will talk more about the psychology. But yeah, I don't know, maybe, I don't know, maybe he's done talking about psychology. I have no idea. Alex Simon, the SMT 5-minute buy. Not seeing silver going hard down. Should that worry me? Is there something what price is telling me what I'm missing? You should worry. So if you took a long on gold, you should only worry if the order flow, the bullish order flow, would stop being respected. What does it mean when the bullish order flow stops being respected? Bullish fair value gaps become inversion fair value gaps. Do you see that happening right now? No, I don't. So for now, for the time being, at this current second that we're talking, you shouldn't really be worried about. But if you're worried, it means not that you're worried about your stop loss being hit. You're worried about how much money you're going to lose if your stop loss is hit. And I'm thinking that you know that you opened a lot size, a position size, which is too big. And you would lose an amount of money that would trigger you. So if that's the case, what you can do, the right thing that you can do and that you should do, just by feeling that thing, to give yourself peace of mind, regardless of whether price will go to stop loss or take profit, to give yourself peace of mind, because right now you have a stress factor, which is what? The risk that is currently being opened with your position. Okay? And if that's if you're thinking that this might worry you, it means that you're not at peace deep down with how much money you might end up losing should price go down and take you out. Okay? If your risk, okay, so you say, no, my risk management is well, I just get very insecure when I take losses, I need to backtest more. You shouldn't get in, you get insecure when you take losses, but do you remain insecure? You know what I do when I'm not sure of something? I look for signs to convince myself whether I'm right to worry about those things or not. So if you know that you need to backtest more, do that. Or a very handy way to see whether you were okay to be insecure when taking that loss is the moment you took the loss, go back and just backtest that portion of price action and see whether you would have done things the same way. Or if there was something else that you might have looked at to avoid the loss. And if you don't find anything, there's no reason for you to remain insecure because you took a loss. You just put it in the category of losses that is just a legit loss. And that's how you ditch the idea of remaining insecure about that loss. Hi Alex, it's been a long time. I left Forex. Oh my god, so hail. I hope I'm pronouncing your name correct. I remember you. But I was in your initial first group of Telegram, one where you shared, yeah. Students had to find out. If it rejects 29.30, it could be a great sell. Yeah. But it should reach 29.30 first in order to reject from there, which we don't know if it's going to happen. You don't waffle, you're full of information. Thank you. Don't forget to like. Yeah, guys, like the stream. Okay. Also, one more thing, and I'm going to say this in every stream, okay? If you guys feel that this information that I'm giving you in here, it's in any way, shape, or form helpful or insightful, I'm sure that you have at least one person that you know of who is a trader or an aspiring trader or just getting the hands of trading, just getting to know about trading. If that's the case, do them a favor, and also do me a favor and share this live stream with them. Okay? That would really mean a lot to me. And also, if you're learning something from this, someone else who is going through the same journey as you are might also learn something. So just make sure to share this link with them. Okay. Questions. I'm really curious if you guys have any more questions. I'm still in that trade that I've taken on the 1 minute. So this one, I'm still in it. I don't know if you can see it, but here it is. Anyway, I hope you can. Okay. And right now I'm sitting at $130 profit on a 0.20. So that's about 60, 70 pips. Right now I'm $140 profit. 70 pips profit on a 0.20. And I'm gonna leave because this trade is locked at break even. So it looks like this. I'm just gonna leave it. Run, baby, run. As a first target, I'm thinking 29.23 and then 29.25, and then we'll see if it has enough petrol to go to 29.30 and maybe higher. Someone was saying that it will not stop till the all-time high. We don't know. We'll see. Maybe it's just going to reject from this, which was previously marked as a breakaway gap. Maybe it's just going to start going down from here, right? We don't know. One thing that I see is that if you go to the 1 minute and you look at this whole thingy that happened here, all this price action, this one, boom, it went up. And the last piece of price action, which is this one, coincides to this one. So we see gold creating higher highs, higher lows, but silver at one point, it stopped creating higher highs, higher lows. It started creating lower highs, lower lows. So if we go back to the 5 minutes right now, gold reached into a minor buy side liquidity area, SMT buy side. It also reached into that fair value gap. Okay. And it's also having a 1 minute and also a 5 minute SMT. And you can see the SMT here. And it's a logic SMT, especially because silver stops inside this fair value gap. This would be a good opportunity right now to short silver, but you know that I'm not shorting silver. I don't ever, because I'm using silver as an indicator. So why on earth would I trade the indicator? Doesn't make sense for me. But we'll see. We'll see what happens. Okay, let's see. Questions. I'm gonna look for a way, or if any of you guys knows how I can put the chat, the live chat from YouTube how I can put it here to see it on my screen. That would really help me, because right now I'm looking on my phone on a live chat to see what questions you guys are asking. I'm just a viewer of my own live stream. I really appreciate your live streams. Thank you, Johnny Brown. It's dope to gain knowledge from your in-game thought process of how you see, break down, and enter trades. Thank you a lot. Thank you also for being here. Thank you, thank you, thank you. Alex, you have been a consistent mentor from Telegram to YouTube to other social media platforms. Thank you. I will be joining the YouTube live streams as much as I can and sharing with other friends. Thank you, Wallace. Thank you, guys. Yeah, we'll see what this thing does further next. But just so you know, I don't think that I'm just going to stay too long in the live stream. We'll see. We'll see. If price starts to shoot up, then yeah, I'm going to stay here and cheer for you guys who took this long. And I'm going to also cheer for my 0.20 position, which is the 1 minute trade. But if it's just going to continue to meander around, I think that I'm going to log out in the next 10 or 15 minutes. By the way, guys, what do you usually do when you have a lot of time? What do you do? How do you fill your time? Because, for example, I have a lot of free time right now, but I don't think I use it correctly, or I don't think I use it the best as I can or to the fullest as I could. So things that I do to, you know, spend my time is just go to the gym, you know, cook for myself. But I don't spend that much time cooking, but just so you know. I spend time with my cats. Maybe, I don't know, I read. But there are 24 hours within a day. And then let's say you rest during the night for 6 to 8 hours. So you're being left with 16 hours for the day, okay? Maybe I go to the gym for 2 hours, right? So it's 14 hours left. Maybe throughout the whole day, I cook and eat for 2 hours, you know? So I'm left with 12 hours, so half of the day. I spend time with my cats, but like, you know, another 2 hours, let's say. Like if we add 5 minutes here, 10 minutes there, 20 minutes there, whatever. And then I'm left with 10 hours, right? And then let's say I read for another 1 hour or two. Let's say I read for 2 hours. So I'm left with 8 hours. So, and then let's say I spend 2 hours inside this live stream. So I'm left with 10 hours, 8 hours. 8 hours or 6 or 8 hours I'm left. What do you guys do with this time? Like, do you have any suggestions? I don't know. If you had a regular lot size on this trade and during the consolidation in 1 minute time frame in gold, and as silver was breaking down, would you be booking most of the profit and leaving a runner on the 1 minute? A regular size? Definitely. Absolutely. Yes, I would. Learning new languages is the best time is the best way to spend free time. Yeah. That's a good thing. How would you manage the position? How would I manage the position? You mean if I was in the 1 minute, right? On the 1 minute. So the moment it reached 1 hour, I put stop loss at break even on the 1 minute chart, on the 1 minute long trade. Okay. Which is, oh my God. Let me just remove some of the drawings in here, guys, because it's just too crowded. Whatever. The 1 minute, which is this one, okay? This one, yes. 1 hour, move stop loss to break even, and book. If it's a full lot, 1 hour on that trade meant 50 pips. If it's a full lot, I would take 90% of it. And then I wouldn't care about it. If it's the 1 minute, okay, if you're talking about the 1 minute. If you're talking about the 5 minute right now, then how would I manage this? Right now, I would not want it to sweep any of this thing in here. So you could bring your stop loss under this fair value gap, under the BISI, and make it sort of like this. Because if it's already rebalanced the BISI and it rejected off of it, and then created another BISI and rejected off of that, you know what I call a BISI that forms as a rejection from another BISI. I call that inception fair value gaps. And to me, it means that price is willing to continue to respect the bullish order flow. So there's no reason why price might want to go down and rebalance more of this fair value gap. No reason. If it does that, it means that it will disrespect the previously respected bullish order flow, which is the bullish fair value gaps that it respected so far. Okay, so it would be a good time if you want to manage this 5-minute long trade. I wouldn't do it on the 1 minute in this case. In this particular case, not really. Just because I like the way candles are forming on the 5 minutes. But if I would see a lot of consolidation on the 5 minute continuing to occur, so I had a lot of consolidation here, and then price created the fair value gap, went into it, rebalanced, rejected, made a pullback candle, rejected, and then it's just the 5 minute is moving as it should. But if I would see that it rebalanced this fair value gap, consolidated, then it's moving a little higher without creating any new bullish fair value gap and consolidates again. And it just creates candles without continuing to create bullish fair value gaps as well. Then yes, maybe I would want to drop down to the 1 minute and try to manage the trade somehow. And I would just look at whatever it is that price is forming at that time on the 1 minute. Just use the same rules, SMT, fair value gaps, and whatever. Okay? But for now, the 5 minute price action is not indicating any sort of reason for me to worry about where price might be headed to. I hope this explains. Start growing your own food on your terrace. Horse riding, beekeeping, you can do it in the city as well. Rowing, giving, you have the Hedestro Lake in the city. Oh my God. I'm afraid. How do you know where I live? Okay, no, you're right. Rowing, it's not really an option because I used to do this back in junior school on the lake here, and I haven't done it for quite a lot of time. I don't know. It's not an activity that I would want to do by myself, you know. And at this moment, I don't have who to do it with. Start growing food on your terrace. That would be a good idea. You mean like plants, like basil, like start small? Yeah, that's not a bad idea. The thing is that my terrace is usually during the summer is flooded with sun. But yeah, I think I can think of ways to bring some sort of shadow or something like that. But yeah, those are really good. Horse riding. Yeah, I love horse riding. I did it a few times in my life. There is, not so far away from here, there is a horse riding park. I don't know how to call it. That's a good thing. I remember there was someone suggesting to me going horse riding. So yeah, that's actually a good idea. But it's not something that I would do every day, right? Beekeeping, I cannot do that because I have cats and they might be stung. People watching is also good. Oh, I love this. Oh my God, I love this. Yeah. Go travel is the best teacher. What you will learn when traveling is amazing. Yeah, but you can't travel. Like I'm looking, you're absolutely right. And I'm going to travel in April for about 2 weeks. By the way, you're not going to see me in April for about 2 weeks. And I am going to travel, but these are not activities that I would do on a daily basis, you know. But yeah, you guys are giving me really good things, really good stuff. Okay, at this point, think about it like this. So we had the news, went up, okay? And then it went down and broke the low of the news. At that point, I'm usually thinking shorts, okay? But look at this candle that created the bearish fair value gap that broke the low of the news. And then look at this bullish fair value gap. Okay, so it's like the bullish fair value gap after taking sell side under the low of the London session, SMT, bullish fair value gap, rejecting off of it. It's just telling you price will go higher. If the news high will then be broken, so you got the news, it's broken to the downside, and then it doesn't reject to go down like I would normally expect, okay? Because I'm always thinking that the news is a manipulation. So if the manipulation occurred to the upside, and then the ignition point of that manipulation is being broken opposite direction, it means price should go down, okay, to me. But if it doesn't go down and it breaks the ignition point of that move that broke the news, it's basically, how should I say, it's reactivating the idea that this push to the downside was actually the manipulation, okay? I've seen this happening so many times, especially on futures markets. And I think that in 8 cases out of 10, price will continue to move higher. So you have the news low, price goes up, the low of the news is broken to the downside, and then it just goes the opposite way and breaks that high, the news high. When that happens, usually it's just going to go up, 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 up. And yeah, that's what I think it's going to do. I'm curious to see if on the 15 minutes silver created any sort of BISI or if it rejected from anything relevant. No, not really. You guys, today's live stream was opposite to what we had yesterday. Really good. You can also identify a cause, local or international, that you could find passion about and give some focus, time, and effort into it. Yeah, I could also do that. Like, you mean like what I did with the orphanage in December, I think. Yeah, that's also an option. Plot twist would be to see gold melting right now. Oh my god, I'm just here cheering for it. Yeah, it's gonna go up, 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 and blah. But yeah, I don't think that will happen. Let's see what my trade is doing. Oh my god, $240 on a 0.20. You guys, I don't know if you can see it. You guys, this is really good. I hope you can see it. I don't know if I'm just putting this the right way. But anyway. So I'm running right now at 120 pips with this trade. This one. And it's already locked at break even. I wonder, will this thing go even higher? We'll see. Let's see if it's just gonna tap on this and then go up, or if it already did it. Curious to see what will happen, or if it's gonna do something with this BISI in here. We'll see. Guys, do you have any more questions? Just go ahead and ask them in the chat. Pottery, you can do it in the apartment. It will be time consuming. Yeah, and it's gonna make a lot of mess. No, But yeah, that's a good idea also. Will gold break the new all-time high? Who knows? New all-time high. Let's see where that is. 29.56. Who the hell knows? We'll see. It doesn't necessarily have to do it today. But yeah, this is a good trade. And if right now I would have taken the 5-minute long, and I would have moved my stop loss here. So minimizing the stop loss means that I would already have a 2R. But we'll see. Let's just leave it like that. See if it's going anywhere. Because we don't know. Trust the process, they say, huh? Okay. Well, guys, I'm honestly going to consider that, I don't know, there's no reason for me to stay in this live stream. So I think we can call it a day. If you guys have any questions, you can leave them in the comment section of the video. Make sure to give this live stream a thumbs up. Share it with your fellow traders if you find something helpful, something insightful in today's stream. Thank you again for being here. I'll talk to you tomorrow at the same time, 9 a.m. New York. And don't forget, oh my God. And don't forget that you can actually just test FundedNext. And you're going to find a link in the description of this video. Okay? Yeah. Talk to you guys. Bye.